So good morning, everyone. Let's quickly have a review for the week ending of 20th Jan. As usual, we'll go through the world markets, Indian markets, stocks. So if you see world markets kind of has been decent only, average of about half to 1% up. Germany has bounced back quite well. Crude has picked up a little, but not so strong. So no negative concerns at all anywhere. Everything seems quite positive. Now, I'll just quickly run through the momentum aspects of the world markets. Since I don't see any concerns anywhere, everything is trading on Dow Jones, no concerns. Tesla's results has impacted a bit on Nasdaq, but not on Dow. Continues. Nasdaq, you see this dip of yesterday. It's primarily back because of the earnings of stocks like Tesla and all, which had crashed 12% day before yesterday. A minor dip in profit expectations took away about $73 billion of Tesla's market cap. Now, S&P finally breaking out and trending even on monthly, it is closed high. Month has not closed, but the candle seems pretty good, trending at all-time high. So clearly, US markets has recovered from all the pain on the bottom, and things seem to be stabilizing. If this trend continues now, irrespective of any big negatives coming from US, this should hold. We should not see much of panic unless it is more than the market's expectation, the negative news. So if you see, this kind of reversal was also seen post to the pandemic fall. After that, as minor ups and downs didn't really matter to the market, barring 1 or 2 months, but the overall trend continued. So the worst seems, behind us now. Nikkei, on the other hand, is broken out 30 years. You see the rally so strong, a little retracement and then moving up. It seems pretty strong. Nikkei, they should be now the multi-bagger economy going forward. Germany is back after retest. If you see, it's back almost at all-time high. Good candles on daily and weekly. So if it breaks out from here, even Germany is going to do really well. Now, US oil, if you see, it has kind of picked up a little bit, that too because of that the tension going on in the Red Sea. Otherwise, this should have continued with the downside. However, seeing that the weekly and monthly charts momentum lags. So I don't think the daily rally should continue much. But yeah, we'll have to watch it closely based on new news. USD INR is consolidating in a very narrow range, and if it breaks down, as I said earlier, 81 is likely to test before it moves up, but now all depends because it's not showing any signs of weakness. On all three time frames, it's like kind of sideways. Gold from trending, it has now come down to sideways. If you see not only daily, even weekly, RSI has gone below 60. We know the range of RSI between 40 and 60 is a sideways range. While monthly is still strong, these two on the short term and medium term is sideways. So now either side breaking out of this range, on the upside about 62,600 or so, and bottom below around 61,400. Breakout on either side will decide the trend. Until then, it's going to be remaining in this very narrow range. Silver continues to be sideways on all time frames. You don't see much happening. One day it moves up and then next second day it falls. So clearly no direction in silver at all. Now coming to the Indian markets, this week we did see a little dip in Nifty and Bank Nifty. Nifty down 1%, Bank Nifty down 2.5%. FMCG is being bad, reality is being bad. PSU was flat on the index front, but yeah, mid cap about 1.5% down. So this week has been a little shaky for the Indian markets on the other, unlike the world markets. So Nifty, if you see, based on the momentum front, it is well placed for reversal, but I don't see a reversal happening too quick. It may consolidate in the range of 20,900 on the bottom and 21,834 on the top end. Once it moves out of this range, will decide the clear direction for Nifty going forward. Stock-wise, momentum may continue, so that is irrespective. It had come closer to the 50 EMA and not really tested, but moved back up. So now this range is something that I'm watching out for to move on the either side. The reason why I'm saying our reversal is because of the RSI on weekly and monthly being above 60, which just shows that there is still a lot of momentum left. Daily is reversing closer to 40, which we all know that when the longer time frames are good, it's on the highway, the daily gets support and gets pulled up. So this is the range that I'm talking about, like these two lines. If on the top, 21,834, bottom, I'm looking at 20,900, which was earlier the levels from where it consolidated and broke out. Once these two levels are crossed on either side, there'll be more clarity on the trend of the market. Equal index is likewise consolidating, not much of move on either side. Stock wise, we know that, okay, one or two stocks are taking a bigger hit because of which this is happening. Now, this is very interesting because of the earning seasons going on. In the last 20 days, Nifty's earnings has gone up by 22 rupees. So 22 rupees into the current P 22, almost 450 points is what Nifty has got cheaper by. So considering the fact that we had fallen from almost 22,100 odd to almost 21,200, 1,000 points over there, plus 400 points here. So we have already seen a correction of about close to 1,300 points. 1,300 points is like a 5-7% fall in Nifty, which is quite good. And the earnings ultimately are not done. The results are yet to come out. So earnings may go up further. So as the earnings go up, we may see Nifty getting cheaper at that front. So earnings wise, Nifty doesn't point to anything major negatives. Like we said, that a dips would be only like, dips in the bull market, not a correction. So this doesn't point to any panic kind of a scenario. In fact, even the guidance given by most of the companies for the coming quarter aren't bad. Bank Nifty clearly sideways on all front. Bank Nifty daily is tested the 200-day EMA and holding above that. As long as it is above this, there are still good hopes of sideways consolidation and a recovery. If it goes below the 200 EMA and closes below that, banking as a sector may get little weaker. And the weaker stocks in that will take a bigger hit. So we have to be very stock specific in the banking side. Some pullbacks can be expected from here. So one of the reasons we had taken the Bank Nifty futures. So as long as it's about a 200 SMA and all, it is oversold. So some pullback can be expected over here. Now Bank Nifty, if you see over here, it was closer to resistance, tried to break out on one of the months, that is December. Jan has given up all the gains. But Jan is also taking support of the support line over here. If it breaks below the support line, you may see a deeper correction in that. Otherwise, it will reverse from here. Now, mid cap, again, not much of weakness. One day shakeout was there. That shakeout was quite intense. Uh, a lot of sectors like PSU and banking, obviously, and reality took the worst hits ever. Metals also. These were primarily the sectors which had the highest retail exposures. So any sector where the retail exposure was higher than the others, they were the worst hit in that Tuesday's fall. In fact, it so has happened that at least five large option traders or future and option traders, seasoned traders, had to close down their accounts on Tuesday because of a capital erosion of 90%. And I know one trader who's a very seasoned trader, after the capital erosion, still owes money to the broker. Now, this is what happens when you are over optimistic only on one particular stock or only one particular sector. And you tend to get blacked out and ignore everything around you. And the kind of bullish exposures that you take, this is what happens. So one of the reasons that we want to be very cautious is these kind of single big candles not affecting us by being well diversified and positions in our control. Look at small cap on the other hand, not so bad, still trying to recover back. Uh, Weakness front, I don't see much of weakness yet. So it can still continue trending back up. Now, auto stock, it did see a dip, good follow-up candles on the upside. Daily RSI reversing from 50, weekly monthly as anyway supporting. So auto stocks selectively continue to look good. We have Tata Motors, we'll hold that. Ancillary stocks look good, so we'll look at a few of them as well. FMCG, on the other hand, if you see there was a very big dip. Hindustan Unilever was to be blamed. The result wasn't that great. And as an index, it is testing the 50 EMA, not closing below that, barring one day it had. Daily coming closer to 40 RSI, weekly, monthly, just weekly bearing to managing above the 60 levels. So need to watch out for reversals from here if there are any. Otherwise, this is going to sideways. Not to add more at this point until we see a confirmed bullish reversal candles. IT. Now, IT is consolidating. It is a very stock specific move from here. Not that the entire sector is moving, though there is momentum in the index. So that should continue. Just stick to what we have. We are not going to look at beyond that other sector stocks like TCS and Infosys and all for now because clearly they are not moving. Now look at metals. Metals hasn't seen a very a big dip on the top immediately like it did with the other sector. This was correcting, and in that itself, it saw a bigger dip. It tested the 50 EMA, holding from there. If you ask me, this is a very good reversal from 40 onwards, but again, a very stock specific reversals. Tata Steel is not going to perform. JSW Steel has its own concerns. Jindal Steel looks good, but waiting for their results. Other stocks, now what has happened is after the stimulus that China has announced, you will see a lot of specialty stocks, specialty metals picking up pace. There was a sudden spike in the prices of copper, zinc, and aluminum and all, but that doesn't seem to hold because China cannot get into big time buying. It is more like a temporary relief at their front. The metal is going to be very confusing to trade from here until and unless there's a very concrete breakout in the sector and the stock. Now, until the sector moves up and gives a breakout along with the stock, I would personally want to avoid. Like sale is definitely building up steam, but until and unless the results are strong, and see, though the candle has closed above all the averages and all, but until I see this highs taken off well with as a sector, I would still stay away from it for now. Pharma. Now, pharma was good. It was a outperformer being a defensive stock. So the other days it was kind of good, but very stock specific move. So we'll just continue with the Zydus that we have. It is very confusing which stock, how the results are going to be. Like Loris, again, people's favorite, had taken a bad beating. Glenmark, on the other hand, is trying to show moving up, but every time it does, it comes down. So be a little careful with pharma. Don't go on all in pharma. Be very stock specific. Now, PSU. Now, this is what bothers me. Whenever an index or a stock, the candle opens at all-time high and immediately falls and doesn't recover to cross the high on the same day, it's a very bad shakeout. This was a day when most of the PSU stocks from the day's high saw an average of 10 to 15% fall. Now, that is not a joke. Now, what happened that day that announcement came that market did fall, but PSU stocks had to react like this. One primary reason was the kind of move that it had already seen, it had to correct to the mean. And secondly, the over optimism and the exposure of retail people. How many people got trapped in that one single day's fall? Their months of profit accumulation got wiped out in a single day in PSU. That is one of the reasons, even stop losses either won't get triggered if the fall is so sudden. So one of the reasons why you need to just not get blindfolded, but see the reality around you and not just chase the stock with the kind of, social media news that comes along and the whole euphoria. Be a little realistic in what your expectations are. A lot of PSU stocks are riding on order book and not really the results are not there yet. And the order book we are talking about 2026 and 27 order books that are getting discounted. A stock cannot rally on order books alone. It's not like an infra company. Now, PSU banks similarly saw sell-off, but selectively recovering. Canara Bank results was good. One thing I like about PSU banks is the monthly cup broke out, based on which we have a strong view of PSU banks as holding. So I would rather be comfortable buying PSU banks on dip, especially Canara Bank, and maybe a little later PNB and Bank of Baroda. And we'll continue holding these stocks comfortably. Equity futures, you'll have to play with your swings. But this sector, as long as it is holding up, not showing any signs of weakness on monthly, can completely reverse and head at much higher levels. Private banks, clearly nothing to talk about, taking bad beating. Uh, I don't know how long will consolidate. So, but I would only say that certain private banks may be good to start accumulating for longer term in small quantities, not go big in it. HDFC Bank can be taken in equity, not in futures. You can dheere dheere accumulate a little for longer term. Every dip can be bought into in small quantities, but give it time to perform. Don't be too optimistic on reversals right now. Reality again, similar dip, but an opportunity to buy because the stocks had run up so high. So it was a good opportunity when the stocks fell. And stocks like DLF, Oberoi, we have Shriram Properties, good to buy because there is no lack of momentum in the sector. And this is going to continue. Market comment, simple. The 20,900, 21,834 range is likely to remain. Move out on either side will make the trend clear. Otherwise, it will consolidate. Bank Nifty is weak and causing problem for the broader market because of HDFC Bank primarily. Other sectors are still in momentum and stock-wise move has to continue. Now, there is a very big event coming up this week, that is the budget. Now, but before the budget, market gets extremely weak. So we need to be watchful. There'll be a lot of speculation around expectations of the budget news. Typical favorites of the budget are fertilizer chemical stocks, capital goods stocks. A lot of news comes that government is going to, announce a lot of, capex in them or some kind of benefits for them. And these are typical news that comes. I would suggest we have limited exposure in futures. We will continue with the limited exposure for now. We don't want to increase our positions from here. The day the budget is going to be announced in the morning on the 1st, we will be very careful about the announcement coming and how the market is behaving stock wise as well as a broader index wise. Need be, we'll exit our positions immediately on a press of a button rather than introspecting too much. And if things are all good on a press of a button, we probably even consider doubling the positions what we have. So if you guys today spend some time, I want you to go through the Nifty chart of 2021 Jan. So what you will observe in that is starting from around 15th of Jan till 30th of Jan, Nifty had fallen almost about 10%. And prior to that, there was a very strong rally up. On the 1st of Feb, when the budget was announced, as soon as the budget ended, market rallied one way. That was one of the years where we are completely out of the market. I didn't have a single position until the budget announcement was done. And since, see, you are in futures, you know the stocks you like, you know the sectors which are moving. On a press of a button, we started just buying the lots we wanted to buy. Within 15 minutes, we had our entire position built up. That is the beauty of being in a market. And once you have clarity of the stocks and the sectors that you want to be in. So likewise, even this budget, we'll be very cautious and we'll act based on where the market is headed and the stocks are headed post the announcement. We will not hurry up while announcements are on because there'll be a lot of nitty-gritty clarifications which come later and you don't know how the stocks react. So let's wait for the trend clarity on the 1st and then act accordingly. Now, PSU banking is going to be focused, metal selective. In this, I am looking at two stocks right now are Hindustan Copper and NMDC Steel. I'll talk about it going forward. I'm doing a little more detailed study of Hindustan Copper for a longer term. I'll get back to you guys with a lot of more information to accumulate for long term, not for trading right now. IT selective, we have a few, stick to that. Auto selective, as I said, we'll stick to that. I'll just take up a few stocks before Sonal explains the market and the stocks we are holding. Now, this is 1 second, there are two more joining. Okay. Now, this is NMDC. NMDC is seeing a beautiful 14 years consolidation breakout, and the monthly is likely to close above the breakout point of 211. We'll be watchful. We'll not be in a hurry to add on. Let it sustain around 230, 240, 250 levels. We'll accumulate an NMDC in equity. The first target comes to 387. Now, this is the 13-year breakout, 14-year breakout. So the upside will not end at 387. The upside will be much higher. It can be a 2x, 3x from here. But we will take it stepwise. We are not going to go all in right now. As the momentum keeps building, every time it retraces, we'll be adding on to it the way we do in all other stocks. Let's say we buy something worth 1 lakh right now, and the momentum picks up. Every time the stock retraces from certain averages and moves back up, we'll add again at that point in time. The upside from here can be manifold in this particular stock. So please note the levels and do not ignore NMDC is going to be the future in this segment. Now, this stock Maruti is in a value buy zone technically, if you ask me, based on the RSI placement. Also, it is closer to the 200-day average. And more importantly, this was the 5-year breakout level. After moving back up, it's coming back to the breakout point. If it retests this level and moves back up, Maruti will be a good opportunity to re-enter for the 15,000 target. So I would not want to get into it until I see a very strong bullish candle. I will not get into it in futures, but another stock where one can start considering to buy in equity. Buy in tranches until you see a very strong reversal candle. The day you will see a reversal candle, that is when we'll consider it an equity at a little higher level. We don't have to bottom fish in this. So Maruti clearly is going to be a good level to buy from here, even if it comes down 50, 100 rupees, not to worry. Yeah, closing below 9,400 and all levels can be difficult. You may have to take a call to exit. So your risk reward is excellent, like 300-400 points down from here, but almost 5,000 points upside from here. Now, another stock, if you see on a weekly, is Nalco, which is breaking out. Nalco, we discussed a couple of times at the level of 92, 93. We have not traded in this because we were avoiding it as a sector itself. But aluminum is moving back up. It has been almost 4-5 weeks. It has closed above the breakout levels. So clearly look at the volumes also week on week. The accumulation that has happened are very strong. So as I said, now this is given a confirmed breakout. We can start buying Nalco even in higher quantities without worrying. Your first target is 182. We'll keep reviewing as it comes closer to the target. No hurry. The target can be higher from here. So after it test 182, even if there is a dip, we won't worry at that point in time. You can use those dips to add back more. But again, clearly almost a 2-year pattern breakout, which is confirmed now. Now, this is the last stock on my end. Tata Power, which was again a 2-year breakout. We entered at the breakout level, traded well in that. It consolidated, moved up. We have re-entered the trade. Now, this is a small cup pattern that has formed. It's breaking out of that and moving back up. So now this time we will continue trailing it for the target of 405. If there are any changes based on any of the supply zones or a candle, Sonal will update you to exit earlier. But in case that does not happen, if you are holding it in equity, you can comfortably hold it for 405 and review later. Future positions, we'll keep reviewing and exit as per the swings. We will not be stubborn to hold on for 405 and take a hit on the downside. So among the stock, this is what I have to share. Sonal, over to you.
Yeah. So,
Your voice is cracking.
Yeah, hi, good morning, everyone. Is it fine now, the voice?
Yeah, absolutely.
Okay, so I'll just quickly explain you what is happening in Nifty, Bank Nifty from supply and demand zone perspective. So first, let me take you through Nifty. Now, as we know that when this, big candle was formed, we were very sure about it reversing from this very strong support zone of 2155. And on even on the 125 time frame, it was overlapping. So we were, very confident that this will be once we will see Nifty reversing from this area. Now, yesterday, the candle, what we see, it has not broken the previous day's low. And if we go to the previous, like the small
Sonu, your voice is cracking.
time frame, we can see that tapping supports have formed. Support zone, I don't know, Mayur, probably the network will back my end. So hello,
Yeah, it's clear now.
Mayur?
Yeah, go ahead.
I, I think network is a little patchy. If you still think that it is breaking up, I'll go to the other room.
Yeah, just go now
So
because
now if we go to okay, 1 second. Let me then go. Oh. Can you hear me?
yeah, clear.
Okay. So let me then quickly just now the support zone has kind of gone up. I'll show you how. If you see here on 125 time frame and 75 time frame, I wanted to draw for all of you so that you are able to kind of understand how the supports are drawn on the basis of demand and supply zone. You can see a lot of congestion, lot of as in the fight between the buyers and sellers here to kind of decide the movement of the Nifty here. So there is one support here. And if I go to 45 minutes also, this is overlapping. So clearly it shows now that Nifty will hold this level of 21,287 to 21,200. In case if Nifty breaks this level, then the next support will be, there is again this entire zone which will act as a good buying area for the bulls. And as Mayur mentioned, this is very much, range bound. The new supply is right now here. I'm drawing the supply in front of you. So until and unless now Nifty closes above 21,500. So just, on intraday basis, this may act as resistance for Nifty. If it closes above it, of course, the below support will hold very good. And then the next supply will come from 21,738 to 21,833. Just mark these levels on your chart and see that how the buyers and the sellers are behaving around this zone. Mostly these zones work very nicely because indexes or the scripts are all about demand supply. Our economy is all about demand supply, and that this is how we gauge the levels based on this theory. So just kind of mark it and see that in the coming week, if Nifty is kind of abiding this zones and taking as in the course based on the resistance and support based on these particular areas. Now, Bank Nifty, why did we go long here? So when there is intraday, I always watch the 45 minutes. This is the candle. This candle we went long because it was not breaking the support zone again, the demand zone. And on the daily time frame, there was a 200 EMA also. So I thought that the risk is just up until 44,266 compared to the reward towards the upside is 45,468. So for long, this risk reward was very good. And as we can see during the day, it kind of respected this area, reverse from here, and now making a nice this thing hammer in the zone. So hammer means the buyer kind of bought the dip, and for the further confirmation, I went to the RSI. One second. So if you see the RSI before giving the long call, on 45 minutes, you can see there was a clear hidden divergence. And this divergence kind of got stronger as the day progressed. Yeah, darwaza band kar do. So as the day progressed, so this was another reason for us to go long for 1:3 risk reward. Now, again, I can see a very good supply, intraday supply or a short-term supply of 45,468 to 45,500. And that is where our target is. We'll see how it is, how the volume is coming around this zone. And based on that, we'll book profit in Bank Nifty. Now, few of the scripts that we are holding and looks very, very strong in this volatile market also is Tata Power. Tata Power, I said that since, the target is on the higher side is quite substantial. It is 466. So that is why we are adding more and more in our equity. And I have given the recommendation also for future, once it crosses 367 level, for a swing target of 389 to 390. So Tata Power, there is a very good box consolidation, and every time a script breaks out of a box consolidation, and you can see the volume here. This fluorescent candles kind of show the institutional interest, and for last 8-10 days, whenever there is selling happening, the volume is always below average volume, and whenever the buying is happening, it is going above average daily volume. So Tata Power is very well placed right now on the chart. L&T consolidating around the breakout, the upper channel resistance. And the result is on the 1st Feb. We will wait for the result, though we have 2 lots. And if the result is good and it kind of breaks out of this channel, we may see it marching towards 4,009. There is another thing, when we suggest one lot, according to your risk appetite, you can just probably increase to your minimum, like you can buy 2-3 lots. When we say add more, you can double it. When we say 1 lot, 2 lot, because we have kind of all kind of clients with not that big capital base, so just to be on a safer side, we kind of tell 1 lot, and whenever we have to add more, we just go to 2 lots. So in case if one is too small or whatever, your capital base is big and your risk appetite is big, you can go for 2-3 lots at first go only. Adani Enterprise, all the Adani Group scripts are actually kind of, building up very well. If you can see, after this box breakout where we kind of went long in Adani Enterprise, it's making pattern within pattern. So now we can see a nice pole and flag breakout, which is going to happen. So there are two kind of correction in any script or indices. First, time correction or price correction. So whenever there is box kind of consolidation where the script or the index is kind of moving in a range is called time-based correction. So time-based corrections are very good for bulls because you kind of know that whenever it, crosses the high of the upward channel, you'll see a good breakout. So the same thing is happening in Adani Enterprise. Very good time based correction. Once it crosses 3,227, we can just see it going towards 3,604. And above 3,227, you can consider it in future also. Adani Port, same. Actually, Adani group companies are very well placed right now on the chart. So you can see this is higher swing. Then the base it has created another higher swing. And this is the base. It is that is the reason I kind of did not adhere to our stop loss of 1150. And here again, it is creating a base, giving a reversal. So every time there is a buying, there is a very tactical buying going on in Adani. There is a good volume here. So yesterday also there was a good volume. And the immediate target for, because we are playing it in future, I don't want to go for very high target. So the immediate target will be 1251. Just ignore the retracements here. Sometimes it's just way of the operators to kind of, shake out the weak hands. But on the chart, it is looking very good for the bulls. OFSs, again, if you go on the weekly setup, we saw on daily how the cup and handle pattern was formed. It gave a breakout. We traded it. Now on weekly also, it is, giving that cup and handle kind of setup. Now, it may consolidate, or you can see a time-based, correction here where it is just consolidating within this range of 6,800 to 7,000 and then breaking out towards 7,400. Again, consolidation, and then you see heading towards 9,000. That is one of the reasons I want you guys to keep accumulating this in the equity, because now the run up will not be that fast what we saw before. So let's just have patience, but the target that we are seeing in case of OFSs is around 10,000. So, and even if you see the valuation supports this kind of target because it is still trading at a P of 24 to 25, which is less than its, peers. So I guess what we are seeing on the setup, on the technical front, the fundamental also supports it. So let's go for a target of 10,000 in case of OFSs and keep accumulating in equity. Canara Bank, as we said that, we book profit the other day in future. For me to re-enter in future, the level would be 470. I'll just reset the chart. The level will be above 470. Above 470, we can see Canara Bank heading towards 497. Now, you would be wondering that how come the result was so good on the surface, all the numbers, the slippages were... Canara Bank always kind of dealt with the issue of slippages. So this time also, we were very nervous when the result was out because it always, gave more slippages than the market expected. This time, fortunately, the slippages were lower than what market was expecting, but we did not see the reaction on the day of the result because of the deposit growth. Their loan growth is good. Their other kind of, growth is very nice within the range. But then the deposit growth is 5 to 6%. And the guidance of Canara Bank is also like, you know, they're targeting, they're being little conservative in case of CASA growth, and they're targeting around the higher range of the guidance what they have given. So they haven't increased the CASA growth guidance. That is maybe, you know, kind of bothered the market that very day when the result came. But the next day, it showed the movement. And let's hope that Canara Bank crosses 470 for us to go long and play the swing in future. Coal India, again, I have told you in the last session that 400 is a mild psychological resistance. Once it closes above it, 408 is a Fibonacci resistance. So that is why be very careful in your future holding. You can book around 400, 408 level and again go long to trade in future if it closes above 408 for the target of 453. But if someone is holding it in equity, hold it stress-free for this big target of 453. Now, Coforge, box consolidation, there's nothing. We have played swing in this, booked profit. Again, the other day, it kind of, you know, showed up. I mean, you can see it was a very good, this bullish engulfing candle it was making when the market closed. But the post-closing was little lower than the previous day high. And I kind of anticipated that next day we may see a sell-off here because it could not close above this supply zone. And you could see that it is, you know, it has come down. The risk reward was very good in case of Coforge. Now also, you can see it is above the breakout level. The time correction is happening. If we want to be extra safe and don't want to trade in this volatile market, we can just close our position if it closes below 6,157. Why I stress on closing, you know, stop losses? Because when you follow closing stop losses, you kind of filter a lot of noise in a candle. You have a clear picture. So that's why I always say that whenever we have identified a high momentum script and it is not moving as we expected, better to follow a stop loss on closing basis, because you will get a better understanding of how the buyers and sellers kind of you know, behave throughout the day. So here also I would insist on don't go by the, you know, the retracement during the day. Even if it is kind of going below this level of 6,157, just ignore it. The closing shouldn't be below it. And if you are not an aggressive trader and a safe trader, you can close your trade here and not hold it further. But in our case, I would like to hold it for longer time because it is still kind of trading above the breakout point. And I think in Coforge, we are seeing a time-based correction. Shriram, the result has come. The result looks decent. Let's see how market reacts on Monday. Manappuram, again, a very interesting script. We know that in between gold prices had gone up in the month of November and December. The one company that will benefit the most is Manappuram Finance. The result is expected to be very good. Time-based correction, you can see it is nicely moving within a range. Ignore the daily whipsaws. Once it closes, probably result will be the trigger to kind of, you know, push it above 182. Once it closes above 182, we can see it nicely heading towards 198 to 210. And if you are, you know, long in this in future, then of course one lot is 6,000. So you can imagine the kind of, you know, run up you'll get in Manappuram Finance. Naukri, same very lethargic moment within time correction, within a range above the breakout point. So nothing to worry about this, and keep holding it. Result is around the corner on the 1st of Feb. So let's see how it moves. NMDC, Payur has very clearly, you know, explained you on monthly time frame. I have been following this script for a very, very long time. I love the setup of this after it had given this head and shoulder breakout. And now it is heading towards our target of 226 based on the weekly time frame setup. Now, Mayur has showed you how it is shaping up on monthly time frame. If the breakout happens, if it closes above 230, you can see a substantial target in NMDC. Tata Motors, nothing to be stressed about. We can see that once you have the clarity of what is happening on the chart, how the buyers and sellers are acting, you shouldn't be, you should not take much of stress. So here in this case also, where is it breaking it is kind of even the moving averages, it is nicely taking support of the short-term moving average, that is 25 days moving average, and going up. So very well placed, consolidating along the resistance of the upper channel resistance, upper band of the channel. So let's see how the result is, and if the trigger is, big enough to kind of break this upper channel and move towards the target of 976. So for future, I think this is a very big target. If someone is kind of aiming at swing, trade in this, for swing trade, the first target would be 845 to 850. Now, ACC the other day was on my radar, even before the result. Unfortunately, once it kind of crossed this yellow where I have put the alert, it kind of zoomed up with, within no time. So I could not share the call in this, but you can see that there is a nice channel breakout in case of ACC. We are still not late in this. Let's see if it sustains, how the brokerages are giving the ratings on Monday morning. If there is a negative rating by brokerages, then of course you can see a little bit of dip and then we can go long. But mind it, February, March are very good, seasonality from the seasonality analysis point of view. This cement sector tend to do well in the month of February and March. So even if we kind of, there is little bit of retracement or whatever, we kind of, go long around this level for a first target of 2,594, and then keep holding it, keep trailing our stop losses. Once it crosses 2,667, that would be a big breakout in ACC. Then there's no looking back in case of ACC. The thing is kind of catching it at the bottom. So let's see if we get any retracement to kind of go long in this. Now rest, ICICI Bank 1016 will again kind of, trouble it. So let's just wait for it to cross that. We would not be taking a big exposure in bank. Canara Bank and ICICI have always been our favorite because of the valuation also. As much as we kind of see the technical setup, we don't ignore the fundamentals. So the book value wise, the order book, the guidance, the management, everything kind of look hunky-dory in case of ICICI and Canara Bank. We will keep focusing on this. PNB is also on our radar. We have traded PNB for a very long time, almost for 6-7 months. Now, once it crosses 105 or just retraces little bit towards 97, 98 with a stop loss of 92, we can easily trade PNB. Now for the next week, there are a few recommendations, though I would like you to just be little mindful about your position and don't take a very, big exposure before the budget. There are few Adani green, looks very good to me. So if you had noticed, most of the Adani companies are making flag and pole kind of pattern. Flag and pole pattern is the continuation of bullish trend, and Adani green here again just kind of, making this flag and pole pattern. A breakout above 1760 will take it to 2,139 to, higher level. So Adani green looks good. I think Nalco Mayur has already discussed. This is on my radar, and our target is same, kind of coming around. What is that? Let me just put it on weekly. Yeah, so this is around 232. So you can keep above 145, 146 if you are comfortable holding, rolling over in future. This is a very good script to kind of consider for next 2-3 months. Even if you see the MACD, see how the trend is changing. So you can see this MACD is, about to cross the signal line. So which is kind of showing that there is a trend reversal in Nalco. Once it crosses the signal line, then we will be quite confident about Nalco for, its uptrend. So this would be another confirmation from the indicators point of view. So this is Bharat Electronics. This sector is very much in traction. I am expecting a good up move in the coming week because of course, 26th January parade and how most of the new those war vehicles, what they displayed in the parade. Bharat Electronics name came many times and they were one of the manufacturer, and we can see a nice time correction happening in within a range, very, very narrow range. So it is kind of compressing, the prices are compressing, the volumes are compressing because it is below the average volume. If the breakout happens, like, if it closes above 190, we can easily trade in future. It is very safe to trade in future for a target of 211, and the lot size is also big in case of BEL. So that's it from my side. Okay, another script which is on my radar is Indus Star. So Indus Star reality sector, but the closing should be above 230. It is struggling for last 4 weeks. It's not able to close above this 230 to 235 level. Once it crosses, you can probably start accumulating in, because Indus Star is a high, it's a volatile script. If you're not comfortable kind of holding it in future, you can just go long in this script in equity and hold it for a bigger target of 396. So this is it from my side. Any script you want me to take